So today I got Jonno Ingerson from CoreLogic with me, talking about the housing market and where things are at the moment. So thank you for joining us, Jonno. Now tell me, the Reserve Bank introduced some new lending restrictions recently which came into force at the start of this month. What impact are they having on the market now?
Well, they had an impact not just from when they came into effect, but 1st of October, but from the moment they were announced back in late July. So what you saw was an immediate impact on buyer demand and on the number of new listings coming onto the market. This is at a time of the year, remember, when we should be really charging into spring and things should be really strong. The level of buyer demand and listings is in many parts of the country, particularly top half of the North Island, lower than midwinter. So that gives you a sense of quite how much confidence and activity has been taken out by them.
Yeah, and obviously that's having an impact on prices, and where are they going? Do you want to tell us about that?
Yeah, well, that's one of the things we're looking quite carefully at, is when are we starting to see Auckland in particular begin to back off. And the very first signs are emerging that the Auckland market outside of Auckland Central, which seems to be continuing to rise, but the rest of Auckland has begun to slow and even dip in the last month or so. So that's a really fascinating sign that, at least in Auckland, things are cooling off. Across the rest of the country, no sign yet of a dip, maybe just that the rate of increase has slowed very slightly.
Yeah. And a lot of these Auckland investors are now using their equity to buy in the regions. Is that what you were showing us before?
That's exactly right. So, and that happened late last year when the LVR limits were loosened outside of Auckland. That caused investors to look beyond the Auckland boundary and invest into places like Northland, where they always have, Tauranga, and particularly into Hamilton and the surrounding areas of the Waikato. Now they're looking even further afield. We're starting to see an increase in activity in Rotorua, but that's probably about as far south as it goes. I mean, further down the country, the impact of Auckland investors, while it's there and it's grown a little, it's at a generally much lower level.
Yeah. And so with these new lending restrictions, what are investors doing to try and circumvent them?
Yeah, well, one thing it hasn't really done is made investors say, that's it, we're out. It's all been about how do we get around these latest set of rules. And I tell you, some of the things they're doing is let's make sure that we split our lending. So you make sure that your home loan is with one lender and that's protected as a 80% LVR. The rest of your portfolio might sit with another lender. But the moment you touch that with a credit event, the LVR is going to crunch down to 60. So if you're going to do another buy, put it with a third lender. Now, it's getting hard to find a lender that will give you money, but you might look at a second tier lender, you might look at even peer-to-peer or private lending. So we're starting to see a lot more of that creative thinking about, look, I still want to invest, where can I get the money? It might be a little bit more expensive, but remember, interest rates are at historic lows, so even if you're 1% higher than a main bank, why wouldn't you do it?
Yeah, and also, you know, you were saying before that, you know, investors actually still have large amounts of equity in their portfolios, so the restrictions aren't necessarily hitting them as hard?
Yeah, that's right. And the other interesting thing actually is that if you look at the percentage of investors that even need a mortgage, now outside of Auckland, your big investors, up to 41% of the time, don't need a mortgage. So for those guys, potentially these LVR restrictions are having no impact whatsoever.
Yeah, and talking to Auckland, you went and spoke to the Auckland Property Investors Association recently, and you asked them what did they think were going to happen with house prices. What was the feedback you got?
Well, it was really interesting. 400 people in the room, and I showed them the charts, which is the first sign that Auckland values are dropping. And I asked that group, do you think that this, when we come back and look at it in a year, will have been the peak of the market? Put up your hand if you thought this is the peak of the Auckland market. Two people out of 400 think that was the peak of the market. The rest, why? Why we're going to keep growing? Supply and demand, shortage of housing, low interest rates. Simple as that.
And your predictions?
Look, I think they're probably right. The other range of measures the Reserve Bank's put in have had a very shallow and short-term effect. Even they think that's going to be the case. Most economists think that's going to be the case. So we're probably looking at 6 to 9 months of a slowing, and then things will begin to pick up again.
Yeah. Look, it's going to be fascinating to watch how it rolls out. Thank you very much for your time, Jonno.
Cheers, Philip.